advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation. So there. Take those words to the bank, but then you can take our advice to the bank, too. We check in what's going on in your money every morning about this time with the resources of Phillip Statler from Statler Financial Services in downtown Sebring, and he's on the phone right now. Phillip, good morning. How you doing today?
Hey, good morning, Dave. Hey, doing well today. It is Friday. It is, trick-or-treating's this weekend, so Fall Festival this week, or tonight, downtown on the Circle. And our church at First Baptist, we're having a big shindig as well. So I get to take off about 2 o'clock and start cooking some hot dogs and sausages.
Ooh, I didn't hear about you guys doing something. It's one more reason to enjoy Halloween. 1 block off the Circle, get some hot dogs down at First Baptist, custom cooked by an expert financial advisor.
That's right, man. Absolutely free.
I love it. I love it. I love it. Bringing us up to the marketplace from yesterday, it was kind of a mixed bag. Dow was off by 141 points, but largely on the strength of Tesla. S&P was up by 12.5, and NASDAQ was up by 139. Boy, between Boeing and McDonald's on a price-weighted index, it can really look growly if you're playing the Dow as being your index on the market, isn't it?
Yeah, it could actually. I had a client yesterday call me and says, "What's going on with the Dow? It's been down 4 days in a row." I said, "Well, hey, it's price weighted. So when something goes wrong with one of those companies, it can really have a huge effect on the on that index."
You mean you didn't just say, sorry, bad onions?
And I did explain that it was McDonald's and Boeing that was really kind of weighing it down.
It was kind of El Stinko, and it doesn't look like it's going to get a whole lot better until Boeing settles their union issues and McDonald's gets rid of all the bad onions out of stuff. The morning starts out, I've got a conflict here. You and I were getting different numbers. The government spit up the durable goods orders for the month of September. One of my reports said they were flat. Now I got another one that says they fell almost 1%. 1% decline was what my tip sheet said it was going to be. Companies buying stuff that lasts. So one way or the other, it was either a very slight beat or a slight decrease. So that's where we're at. The thing that was the miss that everybody seems to agree on, when you get rid of transportation, we were expecting a decrease of 0.1%. We ended up with almost double that, 0.2% decrease in companies buying stuff that lasts. I'd call that kind of a kissing your sister report as far as folks expecting the economy to boom, wouldn't you?
Well, yeah, kind of. I mean, that guess kind of goes hand in hand with some of the other stuff we saw yesterday in terms of the new home sales. It was a slight beat. 738,000 came in. They expected 720, and it's a pretty good sized jump from the 709 that we had in August.
Understood. Stuff is continuing, kind of reinforced the notion that it's a slow recovery, but incredibly slow. And we're looking ahead toward the Federal Reserve meeting. We're now less than 14 days away from it. Next week, the Fed governors end up being told they're into shut-up mode, so they can't do the rubber chicken speeches. The Fed Open Market Committee meets on the 6th and 7th of November. And my odds makers up in Chicago at the Fed Watch, folks, they're now saying there's a 95% chance of another 25-point basis cut, which I get kind of a kick out of because you and I are kind of seeing inflation not getting anything close to under control yet.
Yeah, I'm just, yeah, I mean, the numbers just aren't saying that's what needs to be done right now. But I know that's what the traders want. That's what a lot of folks want to see. But I just don't know that's really the best thing for our economy right now.
Yeah, and the rubber chicken circuit speeches from the Fed governors that were out up until this week kind of indicating they're all leaning in that direction. The dot plots tend to confirm it. Of course, going across the pond are dear friends over in Russia. They've got an economic problem, so let's hope that we don't take their example because their central bank this morning just raised their reference interest rate up to, drumroll, 21%. That would be enough to send you into a tailspin, wouldn't it?
Yeah, I don't think we need to get there, but I think we hold our own right now. That's probably a smart thing to do.
Yeah, rate bumps up to 21%. That would be kind of flushing the commode on the market as it
Yeah,
goes.
it might just throw spirals right into not just a recession, but a depression.
Yeah, I did get a little bit. I didn't get the report on Starbucks, but they've got some difficulty. They suspended financial guidance for the rest of the year. Gosh, it seems like people aren't buying $7 coffee when things get tight.
Imagine that, man. That's hey, when things are tight, that's one thing you can't give up is some of those expensive, crafted drinks that you can get at Starbucks for sure.
Yeah, preliminary report Tuesday said that yet another quarter of falling sales is third in a row. The drop was especially steep in the U.S., where sales at Starbucks fell by 10%. And here's a shocker: in China, sales were down 14%, which is getting their central bank talking about the notion of more stimulus over in China, and we'll see the reaction to that when we get to the overseas markets. But yeah, Starbucks, and among things like Nike, Starbucks, and Boeing, pretty big household names having kind of a rough time of it lately, and it's systemic, unlike McDonald's where they just got a crisis.
Yeah, they're definitely a crisis for sure, what they got. Hey, I did see this, a little slow on earnings this morning, but I did see this. I want to talk about, and I don't remember seeing this hit in the news wires last year, but they obviously they did. Tapestry and Capri. Now that is, Tapestry is Coach. They own the Coach brand, and Capri owns the Michael Kors brand. Well, last year they agreed to a $8.5 billion merger, but that deal has stalled after the Federal Trade Commission sued to block it. And I got to tell you, Dave, it's got Capri falling like a rock. It's down 47% this morning
Gee, Rudd.
on that news. And now Tapestry, it's getting a little bit of a bump. It's up 14%.
Yeah, I had that on my sheave of stuff here to talk about. Yeah, the federal. It's nice to know the government's looking out for us, and they don't want the market dominated on overpriced purses. I mean, they're looking out for us, people, aren't they?
Yeah, yeah, exactly.
Gonna
All right,
spend
so I
five
do have
hundred
a
dollars on
few.
a purse you want competition. Yeah.
I got a couple earnings for us that we
Cool.
can look at here. These were the ones that came in after the market closed yesterday, not what came in this morning. So, but we did have Western Digital, which is an
Hmm.
old name, Dave, when it comes to hard drive. I remember when Western Digital, that was the gold standard when it came to the hard drive you wanted in your computer.
I
Um,
remember it vividly. Yeah.
and so they came in pretty well. They beat by about 6 cents a share, came in at $1.78. They did miss by just a little bit on revenue, not enough to even talk about really. But and so they're getting a huge jump, and the earnings and don't just really justify the jump they're getting right now. But they're up 12% this morning. Um, there must be something else in that report somewhere in there that's given them some great news because the earnings and the revenue don't justify a 12% increase this morning.
I got to assume it's just relief from their investors as much as anything that they're still going to survive the onslaught of solid state drives, which have kind of taken over lately.
That very well could be. Then we had a shoe company report, Skechers. They came out. They had a pretty good quarter. They beat by 10 cents a share, came in at $1.26. Revenue was a little bit ahead of expectations. So they're trading up 7.4%. Not bad for them either. Let me see. No, that's Capital One reported. I was trying to see if they
Oh,
reported or if it was just news, but Capital One reported they really had a good quarter, Dave. They earnings $4.51 a share. They were only expected to earn $3.76 a share, so a pretty big beat there. Revenue was a pretty good beat as well. They're up a little over 3.5% this morning.
cool. Resetting the table here from yesterday, we had an off day for the Dow and an up day on the other two major indexes. 45 minutes before we open this morning, what are we looking at?
And we got some good solid green ink this morning, Dave. The Dow's actually up 1/3%. That's $140. S&P 500 is up a little over 0.4, $24. And the NASDAQ 100 is up almost 0.6% at $115. So it looks like some good moves maybe at the open this morning. We got silver taking a little bit of a retreat this morning, down 0.3. Gold's down 0.2. Crude oil, I think this is lower than where it was yesterday, but it's up a 1.25% from the close at $71.06 a barrel.
All righty. Overseas markets, I mentioned that the Chinese central bank was talking about more stimulus. That made the mainland Chinese markets rather happy. One of the two was up by almost 2% at the close this morning. By and large, the Asian rim was up this morning at the 6 a.m. close. Europe is saying, okay, America's recovering and China's starting to figure out their stuff. It's kind of flat right now. Things have trended downward by 0.06% across the European indexes, which ain't too bad. Flat beats green and beats red any day of the week. Somebody want to figure out what's going on for their retirement? Don't do it off of our daily reports. Do it with a plan. That involves getting with you. How do I find you to be able to get a plan for my retirement, Phillip?
Dave, they can give us a call at 863-382-0037 to schedule their core retirement analysis, where we'll make sure that they're on the right path to the retirement they always dreamed of. And then catch us at statlerfinancial.com and on the radio, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And